everybody, happy Sunday and welcome to episode 5 of the Stock Trading Pit Season 4. Today we have 4 segments to go over. Segment 1 is going to be talking with traders with Dan and our guest Byzantine General. Segment 2 is going to be the broad market review, looking at some broad market ETFs, crypto names, as well as some metals. Segment 3 is going to be the watch list with our guest Blake, aka TrendSpider on Twitter, and myself. And segment 4 is going to be the weekend chart request from our posts that we always do on Twitter. So sit back, relax, and let's jump right into it.
Hey everybody, welcome to another segment of Talking with Traders, where we get to know the people behind the trades. Today I've got a great guest with me, Byzantine General, a well-known crypto trader on Twitter. Biz, thanks for being here.
Hi, nice to meet you. What's up?
It's great to meet you too, and very, very grateful that you'd come on. I think you've got some interesting content to share with us today. So let's jump in. First question for you: how'd you get into trading and investing?
Well, I have a bit of a background in finance because I studied finance at university. And then late 2016, my nephew, who also studied finance, so we have a similar background, he told me about Bitcoin. And I didn't know anything about it at the time. But my nephew is pretty smart, so I thought I should look into it. And luckily for me, I looked into the technology first and not the trading aspect of it. And the more I read about it, the more fascinated I was. And I thought, this is pretty cool. This might actually be worth something someday. And then I discovered that you could actually trade it. And that's how I slowly but surely rolled into it. So I actually started early 2017.
Okay. Did you go right into crypto, or do you dabble in other types of markets like stocks or Forex or anything like that?
I was already investing a little bit in the stock market, mostly tech stocks, but not on a big scale. I was a poor student at the time. But I really got serious about trading once I discovered crypto, basically. And now I still have a stock portfolio as well, but my main focus is definitely crypto because this is just such an exciting market with so many opportunities.
It really is. Do you mostly focus on the large cap cryptos like Bitcoin and Ethereum, Litecoin, or do you dabble more in the altcoins?
Definitely the large caps. I would say that I trade Bitcoin for the most part, also ETH. And then once in a while, I'll also dabble in altcoins, big and small. You know, if there's an alt season, you just got to get with it and trade those altcoins as well. So, but yeah, I would say that I mostly focus on the large caps, mostly BTC, but lately I've actually shifted a little bit to ETH.
ETH looks like a healthier chart, at least to me right now, than Bitcoin.
There's a lot of exciting fundamental stuff going on as well with ETH right now. So there's just there's a lot of momentum, I think, for ETH.
Yeah, there really is. So I'm just curious, what's your like time horizon on trades? Do you hodl long term, or do you mostly trade in and out? Are you swing or kind of a scalper? Tell us about the style.
I don't know how other traders do it, but I have basically 2 portfolios. I have my investment portfolio with a bunch of coins that I just don't touch. I basically buy and hold for the long term. That's mostly Bitcoin and Ethereum, of course. But I also trade on a daily basis, mostly swing trades, spot and leveraged. And then I also do intraday scalps, but that's mostly for fun, if I'm being honest. So I'm active on a daily basis, but I mainly focus on swing trading.
Definitely. Let's shift gears a little bit. When you're looking at a chart, one thing you mentioned when we were talking before we started recording was a clean chart is a clear mind. What indicators do you use? How do you analyze?
I definitely agree with that. I mean, I said it myself, of course. Less is more, in my opinion. That's very important. Too many people clutter their charts, I think. I used to be purely a price action trader, actually. So literally only price and volume, maybe. However, over time, I've learned that there are indicators that can definitely help with your bias. So these days I do look at some indicators. I've tried everything basically, and now I have just a couple of things that I focus on, which is mainly funding, and then also some market metrics like funding, futures basis, that kind of stuff. But yeah, I still try to keep it simple. Price action is the most important things, and then maybe a couple of other indicators.
Got it. When you say price action is the most important thing, do you look at traditional chart patterns like falling wedges and cups and handles, or are you since you're more short term and you're trading, looking at candlestick formations like hammers and things like that? How what do you mean by price is the most important?
Yeah, I think that just structure is very important. I think that classical chart patterns are great to learn technical analysis, but especially in crypto, which is what I mainly focus on, of course, I've come to learn that those classic chart patterns are very unreliable. There are a lot of fake outs, especially on Bitcoin, fake outs and stop hunts. That's basically what it's all about. Especially like right now, we're stuck in this range. So it's all about liquidity dynamics. So spotting stop hunts and important key swing points that could get stop hunted, that's actually the most important stuff. And price inefficiencies and things like that, that's what I mostly focus on. So not so much the classic chart patterns.
Got it. So do you tend to then look at more horizontal levels, like certain price levels and trade with that?
Definitely horizontals. That is my bread and butter. I don't even really use diagonals. A lot of trader friends that I have do, but I think it's all about horizontals, especially for the big caps like Bitcoin and Ethereum. Yeah, that just makes most sense to me as well. And I truly believe that you, as a trader, also have to focus on what makes sense to you. There's no one perfect strategy, right? There are a lot of different things that can work, and some things work for some people, but not for others. I mainly use horizontals because that's what makes sense to me and it works for me.
Got it. So while we're talking about horizontals, how do you identify them? Do you use Fibonacci's, or do you purely look for like where there have been a lot of highs and lows and things like that?
Yeah, I look mainly for POBs, for example, which stands for point of breakout or point of breakdown, or OBs, order blocks, that seem to be quite important. And I also just use regular common sense, a place with a lot of consolidation. That's typically a point with that's going to act as support or resistance. So not so much Fibonacci or stuff like that, just a healthy portion of common sense. And I try to spot key levels. The base just before a breakout, for example, that's obviously going to be a key level. Stuff like that.
Makes sense.
I could
I
give an
notice on
example
your,
if you want.
yeah, actually, that would be lovely.
So for example, right here, I was looking at Bitcoin right now. So you see over here that there is a base building, especially this final part over here. This bit of consolidation just before it breaks out, that is clearly an important level. And then these candles in the middle, these ones, they are, in my opinion, inefficiencies because price just burst through it very quickly. There's not that much transactions going on over there. So if price were to break this level, basically, then I could see a quick drop all the way to this base. I think that a lot of people would try to catch a knife somewhere in between. That is not something I would do. I would wait for price to come back down to this base. That is, in my opinion, the key level. And everything in between is just hot air, basically. It's an inefficiency. It's nothing.
I see this kind of thing a lot where the more experience a trader has, the less they have in their chart and the more they depend on horizontal levels. It's interesting how that works out, right?
I'll take that as a compliment.
Yeah, it is. I notice you have volume profile on your chart. How do you use that? Is that just for kind of informing you, or do you actually use it in your trading?
Yeah, I do use it also for spotting key levels. Then we're back to horizontal levels. So I also use this to look for horizontal levels that make sense. If there's any indicator that you're going to use, pick volume and everything around volume. So the volume by price indicator is also a great one in my opinion. So for example, over here we have the POC, right? So we have a level with a lot of high volume nodes that might also, of course, act as support. So those are definitely levels that you have to keep in mind. And I also use the raindrops chart once in a while because again, that gives more information about the volume, about all the transactions that are going on. And that represents real trades, right? So that type of information is important in my opinion.
I completely agree. Volume is I think everything at the end of the day.
Yep.
When you get a chance, you should play with the anchored on balance volume indicator. It's brand new. I found that to be very interesting on cryptos as well.
I saw that. I'm definitely going to experiment with that.
Yeah, I mean, it's new and I don't really know how to use it myself perfectly, right? Like we built it as an experiment just to see if it were useful, and I mean, it's been blowing my mind.
Yeah, I know a few people who really liked it. So yeah, I'm going to check that out.
Definitely. So let's let's talk about you mentioned some stuff that alludes to like on-chain analytics. Do you use that in your analysis, right? Like flow in and out of wallets and things like that?
Yeah, I actually recently had a discussion about that with a couple of traders. I became well known for my on-chain analysis. However, ironically, I don't use it that often. I think that on-chain analysis is mostly very useful for building a thesis for the bigger picture, basically. And so once in a while, I'll take a deep dive in on-chain analysis just to get an idea of whether the market in general is still bullish or bearish. So for example, last year, after the great capitulation event in March, I started looking at on-chain analysis and I became quite bullish before a lot of other people, not to pat myself on the back too much, but that's mainly because I was building this macro thesis, right? And so I was looking at like spot reserves, flows, that kind of stuff. And to me, it just looked like the market was basically very healthy, although a lot of people were quite depressed at the time because the capitulation event was so brutal. But so yeah, I mainly use it for like big swing trades that I plan to hold for weeks and probably months.
Got it. That's interesting. We're gonna have the guys from Glassnode on this show in a few months, so I'm pretty excited to talk to them about it.
Yeah.
Because it's a topic I admittedly know very little about, other than some very smart people seem to be very into it. So I appreciate you sharing that. What are some, so really quick, one question for you. What are your thoughts about Bitcoin right now? Right, because it's obviously something that a lot of people are anxious about, right? Are we dead cat bouncing here, or are we range bound, or is this just some consolidation before more downside? What's your kind of perspective on it?
You're putting me in a difficult spot because now I'm gonna have to make a call, of course.
You don't have to make a call. I mean, there's scenarios both way, right?
Sure,
I'm just
sure.
curious how you look at it.
The thing is, I feel like the bottom is already in, but I'm afraid to say it out loud.
Okay.
Especially
I
because
tend to
the
agree.
opinions about it are so divided. But I just think I said earlier that I look at a lot of market data like funding and futures basis and things like that, liquidations, open interest, all that kind of stuff. And to me, it just seems like on that 50% drop a couple of weeks ago, the market just got so destroyed. I just don't see a lot more downside happening unless we slip into a full-on bear market for a few years. just like early 2018, I don't really see a lot more downsides. I think that it's quite likely that the bottom is already in. But of course, after such a capitulation event, the market needs time to recover. And so the most likely scenario is that we keep ranging for quite a while. That was my bet after the capitulation event happened. We're going sideways, and bet right now. But I think that there's a very good chance that the bottom is already in. And I think it's hard for me to believe that the bull run is already over, especially with all the new bigger players that have entered the market, like Michael Saylor. We all know when people are buying by the billions. I mean, it's hard for me to believe that the bull run is already over.
I tend to agree with you, and I'm equally reluctant to say it out loud, right? It seems rational, and I know that there is a lot of besides Sailor, right? Just individual big money going into it.
Definitely,
You
yeah.
know, every investment advisor I know quite a few of them being here in the Chicago area, right? Big bank city, right? Any bank that has a Bitcoin product has been telling all their clients buy, right? And I mean, they're managing, hundreds of millions of dollars, right, for some of these big clients, right? And they're
Yeah.
going in heavy, and they have a very long-term perspective, and every time that happens, it's less coins to trade, right? It's less supply, right? So it kind of adjusts that supply and demand dynamic.
Yeah, and these are also the type of guys that aren't going to sell tomorrow, right? They probably
No,
hold for quite a while.
no,
And
they're
and I
talking like
also
hold
just
10
think,
years.
yeah, and I also just think that when we were still at 60K, a lot of people were still cheering and partying and dancing. And now after a 50% correction, everyone suddenly becomes bearish. That just doesn't make sense to me. Everything's basically on sale right now, in my opinion. So
Fear
now
on
is
my
not the time
screen.
to become bearish.
Yeah, if you were going to become bearish, you should have done it at 65, right?
Yeah, yeah.
Well, very cool. So I'm running a little low on time here, so I'm about to get yelled at. So let's kind of transition. I've got just a couple last questions for you.
All right.
One that I think's on a lot of people's minds is what would you tell somebody who is new to crypto, right? Like they want to get into trading crypto, but they've never done it before. What advice would you give them?
I have two simple tips. First of all, be active on crypto Twitter. Just be active in the community and try to make friends, try to build relationships. Twitter can be crazy and ridiculous sometimes, but there are also a lot of very smart people on there. And everyone, I mean, pretty much everyone knows at least one thing that you don't know. There's a lot of stuff that you can learn from for free from other people. So just build relationships by being active in a community. And then secondly, especially for trading crypto, for the most part, like me, pay attention to big changes in the market in general. For example, in 2018, derivatives started taking over, and that had a huge impact on price action. Nowadays, there are still changes happening. For example, the options market keeps growing. I think that's going to play a major role in the future. So those type of major structural changes are things that you should pay attention to. That's basically
Absolutely.
it.
Absolutely. Well, thank you for that, and thank you for coming on the show. We really appreciate you being here.
Thanks
You
for
really
having me. No problem.
For those watching, be sure to we'll put a link in the description, but be sure to check out Byzantine General on Twitter. It's kind of a long name, so just click the link. It'll be below in the description, so you can find them easily. And again, greatly appreciate you being on. Thank you. Hopefully, you'll come on again one day.
Sure. Thanks, man.
Thank you.
Alrighty, looking at the broad markets into the week ahead, it was an absolutely crazy week. Not shocking with quadruple witching and all these other crazy events that happened this week. But we're going to look at SPY. We're going to look at some metals and some crypto. All not looking great, honestly. Now, going on to SPY to start out with, as always, the daily raindrop. You can see here we're anchoring the volume by price from the March lows. We have an anchored view app also from this March low. And you can see where we we kind of stopped the bleeding today right at this volume shelf right here. So a lot of these shares got back to break even, supply dried up a little bit, and that's why we were able to, at least short term, bounce a little bit here, if you want to call it a bounce, but just not break down anymore from here. And on the weekly side, I definitely wanted to highlight this gap below. So we still do have this gap right around 400, which is shown by the gap snake here on the weekly chart. And so not the strongest weekly candle, a gap below. We do have the anchored VWAP below right around 406. So that would be a level to watch below if we do continue down next week. But the most interesting statistic here is the fact that we have, going into next week, a 0% win rate over the last 5 years. So over the last 5 years, since 2016, there has not been 1 week, the 26th week of the year, that has closed higher than the 25th week of the year. So historically, a very bearish week coming up. Not only do the technicals look a little rough, but also the seasonality is supporting that. So that is on SPY. The Qs have the same exact thing. If you guys remember from last week, we were talking about this broadening formation here that we could possibly get up to around 345, and we got right up to that level. And so not only are we at this resistance above, but we're also going into that 0% win rate for the Qs as well. So you can see here that we did break out intra-week through this ascending triangle. You can see here that we did pull back and almost closed right at the top of it. So we'll have to see if we continue up next week, but we have had 5 green weeks in a row now. As you can see, we had 4 red weeks in a row before that. So definitely a lot of just, straight up, straight down type of moves over the last couple months. Now, looking at the seasonality again, as I mentioned, this also has a 0% win rate. But what's really interesting is after next week, we go into 2 weeks with 100% win rates. So that means we're going from a very historically bearish time of the year to one of the most historically bullish times of the year going into July. So a weird kind of thing going on here into the next 3 weeks, but seasonality is definitely something you want to use to get a better idea of what's going on when you're pairing this stuff with the technicals. So that is the Qs. We'll see if we can break through this to the upside, but seasonality and the fact that we're at resistance may be a little bit of a speed bump going into next week. So going into IWM, looking at the small caps absolutely got slaughtered this week. One thing that was really interesting to me, if we use the relative volume indicator, and we'll just turn off the actual volume here for a better look, notice what happens here every time the relative volume really spikes here. So anytime we pretty much get over a 1.5x through 1.5 times the 20-day average, you can see these spikes are highlighted in orange. So anytime we have these spikes, generally this is marked a bottom. So we'll have to see if that's the case going into next week. Looking at the weekly chart, just kind of fun to look at what gaps still are below. We do have a gap way down here. If that gap ever did fill, it would be months, unless we just had some crazy historical crash. But in this case, the main area to watch below would be this trend line, let's say right around 215 for IWM into the next week. Remember, you always just go ahead and create an alert at this line, and then you can add some sensitivity in case we don't get exactly to that area. So definitely take advantage of the alerts on TrendSpider so you don't have to stare at the chart all day. So IWM is one of the few that actually doesn't have a 0% win rate over the last 5 years into next week. So we have a 40% win rate. Just kind of average there. So this is going to be an interesting case study going into the 26th week of the year to see if IWM does pull back with the rest of the markets, or we have some weird kind of disconnect there going into the last week in June. So IWM, you've got this spike in the relative volume. We'll have to see if that plays out like it has in the past over the last 3 or 4 months. And then on the weekly side of things, definitely that trend line below. Going into our next one, we have VIX. So, the VIX is not something that we can really chart out, but we want to keep an eye on it just in case, to get at least an idea of, are the markets moving with VIX? In this case, the markets are moving down as VIX is going up. That's something to keep in mind, that we are really showing a strong move on Friday. And this is worth noting. We are breaking through some of these previous highs here, right around 19. And it's funny, a lot of people say you can't do technical analysis on the VIX, but look at here. This is 3 candles that respected this price level until we broke out. So, or not this price level, but this level on VIX. And then we broke out. So something to keep in mind when you are looking at VIX on a chart side of things. It is hard to chart out, but there are times where it does break out. It's kind of interesting. So all in all, going into next week on the seasonality side of things, we do have a 60% win rate going into the week ahead. So it's weird because with a 0% win rate on SPY versus a 60% win rate on VIX, you'd think that those would be, it'd be 100% for VIX if it's 0% for SPY, but that's not the case. So all in all, VIX does have a little bit of an increase in seasonality with next week's weakness in the broad markets, historically speaking, but we'll have to see how that plays out. Next one is SLV, silver. Yikes, this one did not do too well after the FOMC meeting. We have this massive gap from end of Wednesday into Thursday, just a huge gap down. Remember, if you ever want to look for these gaps, just add the gap snake and you'll see here we've got this huge gap above. So if we did continue to move down, this gap would be pretty irrelevant for now, but if we do move up, this gap would definitely be a target for the bulls to fill to the upside. Now, on the weekly chart, you can see here that we do have the anchored volume weighted average price from this March low. You'll see here that we have respected this anchored VWAP. And what I have here is I have a percent offset. So it's the original anchored VWAP with a little bit of an offset. As you can see, there were times where the price did not actually get all the way down to this VWAP. So that's 1, that's 2, that's almost 3 here. So the offset really does help at least get a little bit of a more of a cushion, if you will. And you can use the same thing with the alerts. The offset is just like the sensitivity, except it's not an alert. It's just the offset. So SLV, really, really bearish candle going into next week. And if you look here, it's about a 40% win rate going into the 26th week of the year. Now, if we do continue down, there's also a gap above here, but there's also a gap below. So the gap below would fill right around 2365 on SLV, and we're almost there. So that would be the gap to watch on the downside if this were to continue down into next week. The next one we'll look at is GLD, another one that did not do too well after some of these meetings by the Fed. You can see here that we do have another gap down here that would fill around 163 on GLD. If we did continue up, that gap above would fill around 171. But these are not bullish candles at all. And this is not a bullish weekly candle. So just keep that in mind that this trend line below may be the area that is retested. You can see here that we have a sensitivity alert around this line. So if we get anywhere within this purple area, we'll be alerted. And actually going into next week, we have about a 60% win rate. So historically speaking, not the worst week ahead for at least GLD compared to the broad markets. Now, those are some metal ETFs to look at. Let's look at some Bitcoin and some crypto. Bitcoin and Ethereum is what we'll be looking at. Bitcoin, not looking great. We pretty much just failed to break this swing high anchored VWAP here earlier in the week. And this is exactly where we had trouble getting through. And notice here that if you look at the raindrops, there was definitely some things to keep in mind here. Notice that as we were moving up, a majority of the volume was at the top of the range here for these two candles. And then once we tried to go above this anchored VWAP, there wasn't a lot of volume profile at the top. And then as we started to move down, notice most of that volume is at the bottom of the range. You don't have a lot of volume at the top of the range like we had on the way up. So anytime you're using raindrops, those are the things that you want to look for. So that's the daily side of things. Now, if we were to look at possibly a downside, the upside is definitely that anchored VWAP from the swing high. So that would be right around 40,000. So that would be the anchored VWAP and a psychological level right at that 40K. Now, on the weekly side of things, you'll see here if we do kind of see this move down and then you've got this little dead cat bounce. If we do get the next leg down, we could be testing this 26,500 area, which would be the COVID anchored VWAP below. And we'll just have to see if that actually makes it that far down, or this is just continued consolidation for the next leg up. We'll have to see. But all in all, going into next week, and we'll change this to December 2017 highs, Next week, we've got about a 33% win rate. So definitely not the strongest week, historically speaking, going into late June. Ethereum is the next one we'll look at. And these are kind of the main two that you can look at for crypto. Obviously, there's thousands of different coins, but these are the ones that I look at for just the broad market crypto sentiment, if you will. So Ethereum on the daily chart, we're breaking down. You can see this is the fourth red day in a row. Remember, we do these recordings on Friday, so this may look completely different by Sunday. But for now, we are breaking down. You can see here if we are using trend lines for the weekly chart, just a simple ascending trend line here. The support, possible support below would be around 1600, maybe even 1500 if there's a little bit of a liquidity issue and there's even more of a flush. So not only that, but going into the 26th week of the year, 0% win rate for Ethereum. So this is one that also has a 0% win rate like SPY and the Qs do. Not the strongest candle setup here on the weekly. So everyone's got to do what their trading strategy says to do, but definitely it may be worth heeding caution if you are going long crypto right now with some of these technicals and the seasonality together. But remember, do not take our advice. We're just looking at the charts, using some of these features on TrendSpider to do so. But all in all, that is the broad markets. Not the most bullish broad market review we've done, but as you know, it's the market. Anything can happen. So we'll see what the week holds ahead, and let's move on to the next segment. Alrighty, let's look at the watch list by our special guest, Blake, aka TradeTracer on Twitter, as well as the founder of TrendSpider. So Blake, thank you for joining us. We're going to go over quite a few charts today, but before we do, can you introduce yourself a little bit and just about your community?
Yeah, first off, thanks for having me. Really appreciate the opportunity to come on here, Jake. Really been a lot of fun, especially using your guys' platform. Has made my trading so much more streamlined and easier. I absolutely love it. A little bit about myself. I've been a trader for over 10 years now and been profitable the last 4. I was a financial advisor. I got out of the advising world to kind of help the average Joe. And I felt like there was a better way to do things as opposed to, the managed money and the fiduciary aspect. And so I wanted to give blanket advice because I felt like I had a knack of reading the market and I wasn't able to give blanket advice as a fiduciary. And so I started TrendSpider, and it's been an incredible experience. I love teaching people how to trade, and I run a service, TrendSpider.io, and you can also check me out on Twitter. But really appreciate you having me on here. Got a few stocks. If you don't mind, we can go ahead and get started here.
Let's do it.
So first up, I want to talk about the broad markets. So the NASDAQ. So the NASDAQ still for me is technically in an uptrend, but we're having a difficult time breaking out and confirming price strength above the previous all-time high. Now to watch this, I typically just watch the Qs. So on the Qs, it's 342.80. I really would like to see price get back above this level in order to give me more confidence to add long market exposure. So the NASDAQ is still in an uptrend. The S&P is what I would classify as no trend. And you can see in here on my chart, I've got some levels queued in here. I don't use a lot of indicators to help me trade. My trading is more based off of momentum and price structure. And so I draw these levels in here to help me as a guide or as a reference where I know, the status quo has changed. So the S&P, you can see this cloud in here, and I have this on every single chart, which is just the simple 10 and the simple 50 day moving average. So closing inside of the cloud on the S&P is a warning signal for me. So this would be no trend. And my number one priority in my investment accounts are preservation of capital when we go into no trend. I like to put a lot of leverage on, and I put size on when we enter brand new uptrends with momentum. And then I scale out as that price advances. But once we start closing inside of the cloud, typically cause for concern. Now we did get that cause for concern today with the Dow Jones. And I've been mentioning that, for a long time, the Dow was the leader, right? We had this rotation out of tech into the industrials. And you can see just, once we got above this cloud, we were in a very, very strong uptrend. And now today we actually closed below some key pivots 342 is a pivot that I had for DIA, which is basically just tracks the Dow Jones Industrial. Today we closed below the cloud. So that means we completely have broken trend on the daily time frame. So your names, that make up this index probably want to be steering clear of. Now, one of the things that I'm hoping that can happen, and I think we're set up for it, is maybe we can get some of these names that have been lagging in the technology sector, like your Amazons and your Apples and your Teslas, to go ahead and take the lead and hopefully see that rotation back into tech. Because if you look at tech as a whole, right, the NASDAQ is pretty much at all-time highs. We held the cloud today, had a nice reversal off of that. That was a positive sign. And I think that if we can get some of these names that have been beaten down and really haven't done much for, pretty much over a year. So Apple is one of those names. We're trading at the same levels on Apple that we were back in August of last year. Amazon's same type of deal. Amazon's pretty much gone nowhere since this, July of last year. So these stocks have been in a long consolidation range. They haven't broken down, but they've moved sideways and they've allowed these moving averages to catch up to price. So if these stocks can start to take the baton and can take the lead, I think that's going to be enough fuel to power this NASDAQ higher, considering we're already almost at all-time closing highs. So that's primarily what I'm looking at from the market's perspective, right? So I'm very cautious on the industrials. The S&P is giving me warning signals, and I'm really looking to see if the Amazons and the Apples and the Facebooks and the Netflix of the world can take that strength and move it into the NASDAQ. If that doesn't happen, we're going to be vulnerable for more downside, right? I'm not going to be a perma bull and just say, hey, we can only go up. It's very important to always keep an open mind and play both sides. So if we don't get that, if we don't see the Apples and the Amazons of the world start to show relative strength and lead the NASDAQ, then where is that strength going to come from, right? So we're going to be vulnerable if that doesn't happen. Just my take. Let's move into some crypto real quick. I know everybody's really excited about crypto. Maybe you just got into this. Maybe you've been in it since 2016, 2017, and this is your second round experiencing this type of volatility. But Bitcoin, if we look at the higher time frames, Bitcoin is on the weekly time frame, still hanging out within the cloud. All right, so still not a ton of damage, but we're building a base around this 38,000 level. And if we pull up the volume by price, which is one of the indicators that I love to use on TrendSpider, if we anchor this back from the September 2020 lows, right? So we've got quite a bit of time built in here. You can see this volume shelf that's being built between the 38,000 and the 35,000 levels, right? And you can see there's been a lot of trading action. So it makes sense that there is some sort of volume building at this level. If we can stay above the 38,000 level, I think that we have odds to push up towards 39, but I'm not feeling really comfortable of adding new long market exposure on Bitcoin until we can get next to this 41,900 level. That's really the level that I'm watching to maybe squeeze higher. Now, my personal opinion, I'm not perma bull, perma bear on Bitcoin. I think if we're looking 5 years out, this is much, much higher. But if we're looking 5 days to 5 weeks out, that could be a completely different story. So keep an open mind on Bitcoin. Ethereum, one of the things that I'm watching is this anchored VWAP from the all-time high. So this anchored VWAP was actually brought to my attention by Brian Shannon, somebody who I really respect in the Twitter space and in the trading space as well. But he brought this to my attention. This anchored VWAP has been acting as perfect resistance since these all-time highs. So ideally, I want to see us break out of this wedge. I want to see us base above this VWAP, which currently is right around the 2750 level. And I'd be getting aggressively long above this previous high, this 2,915. If Ethereum can get above that level, that's when I'll feel comfortable adding a decent chunk of long market exposure. But as it stands right now, this is still a bearish consolidation, right? So Always got to keep an open mind. We are in a bearish bear pennant flag. And if we break below, we've got levels to around 1,900 and we'll call it 1,800. So keep a close eye on Ethereum as well. Just a couple stocks that I want to go to. Jake, how we doing on time?
We're doing great. We'll do 5-6 minutes left to go over as many as you can.
Perfect. Let's crank through them. PLTR is one that is very high on my radar. Really like this setup. Couple things here that I want to note. So first off, we have this anchored VWAP from the all-time high, and no surprise, right? Price is pausing at this anchored VWAP. That shouldn't be a surprise to anybody who has watched any of the videos that you guys put out. I know, Jake, you do a ton of stuff on anchored VWAP. So no surprise that we're seeing some sort of resistance at this level of interest. But one of the things that perks my interest is we've got this massive volume shelf that we've basically just been bull flagging above this cloud pretty much for, it looks like, around 2 weeks. So from May 28th, right, until now. So yeah, pretty much 2 weeks, we've just bull flagged above the 10 and the 50-day moving average, right? I love to see that because price is consolidating. It's allowing moving averages to catch up. We're consolidating at a level that makes sense, this massive volume shelf. And it sets up well that if we can break above this anchored VWAP and above yesterday's high, which was 25.55, that's going to be good enough for me to go ahead and take a long position in this stock. So PLTR, I think, has a phenomenal setup. Ideally, I would like it to break out, come back, retest, and then make a move. We don't always get that as traders. We don't always get the ideal setup. So for me, I'm comfortable taking it on a break above the previous high that broke above that VWAP. So PLTR, keep on your watch list. Really like that setup. Shopify was another one that we've actually been long since 1250. And I just want to kind of walk through what I saw in this trade and why I still like it. So I'm going to clean this up just a little bit for you. So what I liked about Shopify was once we closed above the cloud, that perked my interest. Then we had a nice rally up to some previous levels that we've identified as levels of interest. And then we had, you can't see it, but this was a light volume pullback into the cloud. Now, if we drew an anchored VWAP from the breakout level, which I would call the breakout level where we break above the cloud, if we drew an anchored VWAP from this date, which was May 19th, you can see that back on the June 10th, we closed above it and closed above the cloud. The next day we broke the wedge, closed above the cloud, and got a bounce off of that VWAP. So I really thought that this was a great level to enter. It wound up being a perfect entry. So 1250 was our entry. We've already hit 3 of our levels, and I think this has room to go at least back to all-time highs. The next level I'm targeting on Shop is 1413, and then 1452 on Shopify.
I love it. And it looks like Shopify finally filled that gap as well from February drop.
Yep, looks like it pretty much, yeah.
Almost, yeah. It's always interesting to see literally just gaps become a magnet a lot of the time. And yeah, Shopify is one that kind of the same thing as Amazon and Apple have just been stuck for literally 6 months now. So it is nice to see that one catching a bid, and could be a sign that we could be headed higher across the regular broad markets, even though there are some warning signs for sure, especially going into the next week with that weird 0% win rate for some of the broad markets. But all in all, really nice move over the last couple of days. Now we have time for one more chart. What's kind of one that you're looking at into the coming, let's say, 5 to 10 trading days, and what you're seeing?
Perfect. You're gonna make me limit this here, but let's go with space.
Looks good.
So yeah, this is one of my favorite stocks to trade because when this gets on a run, it can really rip. And if you don't get in at a good entry, it's really tough to sit back and just watch it rip without you when you were watching it. So space is one of my favorite plays, over the next couple of weeks. So what I'm seeing here is, once again, a bull flag above a previous breakout level, right? We're above the cloud, and we put in a lot of price movement above the anchored VWAP from the all-time high. So from the February 4th high, we're back above that anchored VWAP. So that makes me feel like bulls are getting control again. People that got in back here are still, at somewhat of a, somewhat green on their trade over the majority. But I like to see that this is pulled after this breakout, it's pulled back into the cloud. And this is ideally what I'd like to see is a break of this downtrend line and a move above the VWAP. So I have the VWAP from the breakout of the bull flag. And ideally, I'd like to see a move above the VWAP, which, we can just call it this level, which is roughly 36.56. Above 36.56, I think space definitely has legs to make a move easily up to this gap fill around 41 to 42. So I think that's a high probability trading setup that offers a good risk reward, provided the market wants to remain in an uptrend. So I like space moving forward.
Love it. I think it's interesting that, a lot of these growth names have that gap from like, what was it, like February 25th or something. And so like that gap is kind of like a constant that you can use and go back. And yeah, same thing. Fubo's got the same one. And it's interesting to see that you can kind of tell what's leading and what's lagging based on that gap, what's filled, what hasn't. And so I like to use that as kind of a way to see what's leading and what's kind of lagging behind still.
Yeah, I like that approach as well. Jake, if you don't mind, if we could just do one more, since we were talking about crypto. I thought it'd be interesting to bring up coin.
Yeah, absolutely.
Cool. So yeah, Coinbase Global. It's the primary cryptocurrency app for United States users. At one point, I think it was the #1 downloaded app in the App Store, which probably should have told you that Bitcoin was getting to be a fairly crowded trade, right around 60,000. But one of the things that I like about this is, once again, using this volume shelf in here. So since the IPO date, we're building a base towards these lows. So basically, this volume shelf is looking like a good potential area of support. So as long as we don't break below, the 223 level, we can call it. And ideally, if you want to be a true technician, you could say a break of 217. I think as long as we hold 217, if we can get back above the 240 level, I think we could see 260 and 295 fairly quickly, especially if crypto decides it wants to take a turn to the north side. I think coin is putting in a solid base. Depending on your investment time horizon and how you feel about crypto, I think this might not be too bad of an area to maybe start building a position.
I love it. Well, we were able to touch on quite a few charts, some broad market, some crypto, some individual names. Blake, thank you so much for joining us and going over these charts. And if you guys want to follow Blake at TrendSpider, is there like a 1 or something after that, or is it just at TrendSpider?
At TrendSpider.
At TrendSpider is where you can find him. And Blake, thank you so much again for coming on as a guest. And let's move on to the next segment.
Appreciate it, Jake. Take care, man.
Alrighty, let's look at some weekend chart requests. We have 5 to go over today. We have Netflix, Penn, PLTR, Wish, and Apple. Starting with Netflix, we have the daily and the weekly. Daily is showing this just huge gap above, which is just from that earnings gap down. And you can see it was actually a pretty strong Friday compared to the rest of the market. You can even see that we had a little bit of volume at the top of the range on the raindrop here, right at the anchored VWAP. Now, the main thing here is the fact that we did have supply above, and that's likely why we had trouble getting any higher than we did on Friday. So we had the anchored volume by price shelf here, which is acting as break-even supply, but we also had that anchored VWAP. So kind of a double whammy there. The main thing to watch here would be a break above the shelf if this shelf does break, you want to break this previous high around 511, and then we start possibly getting into the gap territory above. Remember, you can create alerts on the gap snake. So just right click the line, create the alert, and you're able to create an alert right when the price starts to fill the gap. So that is a great way to use the gap snake and the alerts together. One thing that I'll mention on the seasonality side, this 25th week of the year has a 100% win rate over the last 4 years, because we can only go back so far or actually no, sorry, we can go back to January 16 here. Same thing though, we've got a 100% win rate for the 25th week of the year, but going into the 26th week of the year, we have a 0% win rate. But notice here that this is a decent setup on the weekly chart. So we'll just have to see what happens. The main thing though is that supply zone right above. Now going into PEN, this is one that has really not been a fun one to watch over the last, literally since the February highs here. Just has not been able to catch any type of bid. I don't want to call this a double bottom because it hasn't proved itself yet, but we do technically have almost a perfect double bottom right here. If bulls really wanted the ideal textbook move, we'd get a nice move like this for a W bottom. We'll have to see if that actually plays into the mix into the week ahead. And it's just one of those things that this is not a bullish weekly candle. If we look at the anchored VWAP from the COVID lows, there's a lot of room to move back down, and we'd still be up pretty high over the last year and a half. So even if we did pull back to 51, 52, we're still pretty up there compared to where we were at the COVID lows. So we'll have to see how this plays out. And just in general, we do have a gap above for the bulls, for the bull thesis here. But then going into the next week ahead, we only have a 20% win rate for PEN. So not 0%, but it's definitely not over 50. So with that type of weekly candle and that type of historical seasonality, not the strongest setup into the week ahead, but there's crazier things that have happened. And who knows, we could move really hard to the upside next week. Going into PLTR, this one finally got above that anchored VWAP from the all-time highs. If we anchored the volume by price from the all-time high as well, we did get through the supply zone. This area was the supply zone for like 2 weeks. We finally started to move up off of it. The launch pad effect kind of came in here, and we did close above the anchored VWAP, but then on Friday, we did pretty much close right at it again. So that would be the main thing to watch. Now, one thing I want to mention here on the weekly side of things, I anchored the on-balance volume from this high, and you'll see that it's been at below zero now for the last 2 or 3 months, and we finally broke above this. So definitely possibly some meaningful momentum and volume starting to flow into this. And the only thing I'll mention is this would be the 6th green week in a row. 7 green weeks in a row, great, but is it going to happen? We'll have to see. Who knows? We may just need to retest this IPO anchored VWAP right around 23.75 if there's a little bit of a pullback next week. Going into Wish, this is just one of those stocks that has an acronym that everybody can say is a word, and I feel like that's why it's actually like a thing. But the setup is pretty decent too. You've got this volume shelf here. You've definitely got this kind of coiling formation. You've got some tightening here. So if we do break out, this would be the area to break out into next week. The volume shelf's there. We have a previous high of around 15. That would be an area to watch. And notice that we've got the blue raindrop here right on the volume shelf, and then a move up. So, the bull thesis is there. The one thing I'll mention on the weekly side of things is from the all-time high, or from this highest open candle right here, we did get rejected almost perfectly at this anchored VWAP. So that is something to watch if we do continue up. Not only this $15 level, which is a previous high, but the anchored VWAP right around, let's say 1165, 1175 or so on the longer term side of things to keep in mind. So that would definitely be the first one to watch. If we do get through this anchored VWAP, that previous high around 15 would be the next area to look at. The last one we're going to look at is Apple. Apple finally moved up this week. It's been a while since it did anything. So if we anchor the volume by price from this high here, this is the all-time highs, you'll see that we were able to move up nicely through this volume gap. We didn't make it to the supply zone above, but if we did continue up next week, that would be an area to watch for possibly some consolidation, maybe some supply to hit the market as people get back to break even and possibly holding for quite a while. Once they get back to break even, they want to get out. That adds supply into the market. It becomes a short-term resistance zone. Now, on the weekly side of things, you'll see here that we do have this symmetrical triangle that technically did break out. I had somebody ask why I didn't connect to this point here. And the reason is I just connected the wick to the next wick, and that wick is here. So that's why it looks like this. And so technically we did close above that area. So all in all, a decent week for Apple, a little bit of a pullback on Friday with the rest of the market. But all in all, we're still in this volume gap. We don't have any gaps above, but we do have this gap below shown by the gap snake that would fill around 120. And all in all, going into next week, we have about a 40% win rate over the last 5 years. So that is something to consider. And if you guys do want to challenge for Sunday night, try to say win rate 5 times in a row. It's hard for me to say it one time. So hopefully this chart request section and overview was helpful for everybody. Remember, if you do enjoy these episodes and our stock trading pit overall show, definitely like and subscribe. We have these every Sunday. If you have any questions, you can always reach out to the customer success team or send us a message on Twitter. Our DMs are always open, and hopefully everybody has a great rest of your weekend and happy trading into next week.